Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Unity software, ticker symbol U. And so I wanted to go over the chart, but more specifically, I wanted to go over some unusual whales data because there has been some selling of calls, it looks like, a massive amount, and this could be topping. So I wanted to go over that. I actually recorded a video last night going over it, decided not to post it, and then I'm kind of tired. I've been working late this week, and I should probably still be sleeping, but I was curious about this. I wanted to go over it, and I thought I'd record it, share it with you guys in case it's helpful. So let me know if you do enjoy these kind of rambles, diving into the data. But yeah, here on the chart that we can see Unity software on the daily and the y-axis, just to point it out, it's linear. If I switch it over to log, it all, looks pretty similar on this time frame. So I'm not too worried about that. But the thing that is of interest is we saw this big spike in volume yesterday on November 5th. And that was on earnings day. We can see that right here. Looks like they had good earnings as far as I understand. And we saw a gap up, then throughout the day, big wick down, but then that volume pushed it back up. So kind of a weird day because a lot of volume and the candle itself very small with a big wick down. We did, as you can see, opened and closed above the blue line here, which is the 50-day simple moving average or SMA, right around 40 bucks. In the pre-market, it's trading right around 42, a little above, but it did close yesterday. I should note, closed yesterday on November 5th at 42.36, hitting a high of 42.66. So, yeah, looking pretty interesting there. But this is only one close, one open and close above that line. I'm kind of wondering if there could be a flush out and dump. Really looking at the unusual whales data, it does suggest that there's a lot of selling of calls, which could be suggesting a top is in, and only one close above this moving average has not cemented it in, as support. We're not anchored up here. We really need to be getting multiple closes up there to suggest that this could be acting as support. And maybe it's just that we back test 40 and then we start to go higher. But the options data, again, not really looking that good. So this is the net call and put premium from yesterday, November 5th. And what we can see is we got this red line here. It looks pretty much flat going across the top. It's the net put premium. And we can see that while it looks flat, it actually went up by $1.83 million. So that suggests buying of puts. But what we see that really stands out, the reason why that looks flat is because of this green line coming down pretty massively. And that is the net call premium or NCP. And that came down a whopping $46.64 million. So that suggests to me that there's a lot of selling of calls. And, it's, does kind of fade lower. So that doesn't really suggest it's like one big order. But if we just look at the, drop right here, where net call premium at the beginning of this drop is down 5.74 million, we just go a couple minutes over, 1 minute over, and that net call premium went from, around 6 million down to around 11 million down. So a $5 million drop right there from, again, 5.74 million, then down to 10.88 million. So that's a pretty big drop. That does seem pretty significant. We do see all this red here. That does suggest the selling of calls. And to put this into context, let's just expand this back 30 days. That's the maximum I can go here, just to put it into context. Okay, so this is basically a flat line ranging from, plus or minus zero plus or minus $3 million in net call and net put premium. And then we see this massive drop in net call premium. That does suggest this is pretty bearish. So this has gotten me pretty interested. And so last night, I, just searched the highest premiums on, Unity software. The default is by highest volume. You can also filter it by open interest, but I wanted to filter it by premium. And what we see, it's very interesting. This is $82.8 million traded yesterday on November 5th for the $30 strike call that expires in January for the monthly contracts on January 16th, 2026. I already had that in my bookmarks. I also already had the 65 strike call that expires in December of 2027. Actually, no, I didn't have that one in my list. I had a different one, I think a $65 call that expires in oh no, it was, I'm not sure. Anyways, I added some. That's why you see bookmarks here. I also added some more. They're in my list here, but I've actually just kind of compiled a bunch of them over here. So I thought I'd just walk you through my thought process so we can try to understand what's going on here. And this is the same chart that I was going over here. This is over 30 days. This is over 1 day. And so this is the exact same chart that we're seeing over here. It's just compressed a little bit. So we're just going to have that behind me so we can kind of see that. Look at the different contracts over here. So I'm actually going to start from the top of the list. And actually, well, I might, let's see, sort this by ZA so you can see the, the ones up here. And then let's see, these are also going to be in reverse order. So I'm going to start from the bottom here with the most recent expiration, the soonest expiration at the bottom, and the latest one, that 2027 December call at the top. So let's begin right here. This is the $35 call that expires this coming Friday, so tomorrow, November 7th. And what can we see in this? We see this spike over here. That was around, let's see, 945 to 950. So if we look at the chart over here, let's see, I've got to, I guess, scroll up a little bit to see that. I'm not sure. Maybe I don't want to dive in too much to that kind of detail, because really what I want to look at is just down here. So on November 5th, the day started with an open interest of 4,700. And so we see that right there. And then we saw a volume of just shy of 4,000, which led to a decrease of about 3,000 contracts, going from 4.7 thousand to 1.5 thousand. So that's a decrease in these contracts being held open. That's bearish. That suggests selling of this contract. That is in the money now, so it would make sense to take some profit. So I understand that. And it's expiring tomorrow. So this is not really, one that stands out to me as being that significant. Makes sense to take profits before something expires. But, this could also be, exercised or to, get more shares at $35 when it's trading around 42. So, okay. That's something to consider. And also I should note here, the premium yesterday that was traded is $2.2 million. But what we saw and what we can do is, maybe I'll just do this for all of these contracts. Maybe it's helpful for you. It's definitely helpful for me just to kind of talk about this and try to understand it. And so what we can see, let's see, the average fill from yesterday, $4.47 times 100 shares per contract. And I'm not going to say that again. I'm just going to multiply it by 100. So 447 times the change in open interest. So that's 3159. So that means there was a withdrawal of $1.4 million previously going along this contract. Okay, but now let's go on to the next one. This is the $40 put that expires for the monthly expiration in November on the 21st. And we can see these two spikes here. This is put premium. And, over here, we can't really see that much detail in the puts, so not really going to consider it over there. But we do see that, volume has exceeded open interest for this contract. At the beginning of the day, we saw these two spikes that represented a premium of about $1 million here and about $715,000 over here. And what we can see is open interest was around 900 contracts. Volume yesterday was around 8,000, which led to an increase in open interest by about 1.7 thousand, taking open interest from about 900 to about 2.6 thousand. And so let's just do the same math that we did before. And so this is, 217 average fill from yesterday, and then multiply that by the increase in open interest right here, 1764. And we can see that's about $400,000, and that would be going short, presumably, because this is a put, $40 strike put. That's just going $2 lower than where it's at right now. That doesn't really seem that crazy. Premiums here, hundreds of dollars, so maybe that's a lot of money. Anyways, let's go on to the next contract. And again, these all had, I believe, over $1 million in premium yesterday. And actually, it's from over here. So yeah, I'm basically just going over all of these, I believe, that, from 1 million up to 82 million. And so it's possible I'm missing some. It's possible I have an additional one in there. But anyways, this next one is the $30 strike call that expires in January. This is one that's been talked about a lot in the past. Potentially that Roaring Kitty was trading this, accumulating it, stacking it. And what we can see is the open interest yesterday, a lot of open interest, about 79,000 contracts open, but the volume was nearly that at around 75,000, which led to a decrease in open interest of around 40,000 contracts, going from 78,000 to 38,000. And that premium, again, was over $82 million, so that's quite a lot of money. And then if we come over here and we look at that change in the open interest, multiply that by the average, each contract there over $1,000, so that's pretty insane. And then we multiply that by 40,219, and so that represents a withdrawal of $44 million that was previously long, no longer long. These are in the money contracts, $30 strike calls, with it trading around 42. Taking some profits, taking some risk off the table makes sense, but that's a large amount of money. And so now, what do we have? I think, there's another side to this as well. And that's, that we still have a good amount of open interest starting today. And so that's a little bit less than it is over here. But it's still around, probably $40 million. But let's just do the math. So 1,100, multiply that by the current open interest is 756. Right there, 38756. Yeah, $42 million. So $44 million risk taken off the table, $42 million still going along. So this could just be risk management, but it could be a signal, could be a sign. But there's still a lot of money going long. But I mean, if you made, millions of dollars on this, 44 million, taking, millions to tens of millions, you can still leave, 40 million on the table. It's still taking some risk off the table. So yeah, I mean, I just think that's interesting. And what we can see is this is not one, execution. This is not one, sell all at once. We can see a series of candles here. So this seems like it was, and they're all very similar sized, with the last one, the final one, being, kind of a big one. And so that's like, repeat, 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 punch, and yeah, these candles over here, 5 million, like I talked about, like the drop over here was about 5 million, 6 million. This one's, let's see right there, 5 million. So these are all about 5 million. And then we see this last one here. It's about $11.6 million premium there. And so, yeah, this makes me think that, somebody's taking profits. I don't know if it's the same account, but it does seem a little bit sus. And over here, now let's look at the $45 strike call that also expires in January in 2026, about 71 days between now and expiration. This is where things get interesting that I don't necessarily understand, but I think it makes a little bit of sense. And the reason why it makes sense, potentially, is because volume has exceeded open interest. And so I still think this is a bearish bet, even though the number here is green. And so what we see is the open interest yesterday on the 5th was just shy of 10,000 contracts. And we saw from that a volume of 22.5 thousand. So that's why we get this exclamation point. Volume has exceeded open interest. So that stands out. And so if that was, that suggests, potentially buying. However, this could be selling covered calls, because if the same person, and actually let's look at this. Let's look at the time here. This was at 10:30, and the one that had all the little red ones there over here, we see a spike here around 10:40. So not time to, I was wondering if there's, kind of these are moving in concert or something. But if you have a bunch of calls, you would probably also have a bunch of shares. And if you think it could be topping, you can take some profits on the calls, take some of that risk off the table. That's what's being done over here with this. But if you have a bunch of shares and you think it's going to come down, but you still want to hold the shares, you could potentially, sell covered calls at strikes that are out of the money, so that if price goes up, maybe you get assigned on those, you get forced to exercise, or not to exercise, you get assigned on the calls that you sold, covered calls, and then you'd be forced to sell at 45, not 42, if price closes above 45 in January. But if price goes down, you collect some premium. Look at that premium. The average premium was 301. So you're collecting like $300 per these contracts. And so if you're still long Unity software long term, you want to hold your shares, but as it comes back, maybe rather than buying puts, you could just sell some calls, make some money on those shares. So that seems very interesting to me. This is making sense. This is my thought process, taking you through it, explaining it. Hopefully it's helpful for you. But what we can see from that 22.5 thousand volume right there, we see an increase in open interest of about 19,000. And with that average fill of 301, so let's just type that in here. Okay, and then multiply that by the change here, 19,340. That's about $5.8 million. So you could still, this person, if they sold covered calls here, if that's what I'm getting, then, they're still holding the shares, but then they're collecting $5.8 million. If price closes below 45 on January 16th, they get their shares back and they keep their $5.8 million. If price closes above 45 on January 16th, they're selling at a higher price than it's at now. And, then they collected this premium and then they're selling at, 45. So I find this to be, very interesting. This is also suggesting that it's kind of bearish, but it's a way to hedge in case it's not bearish and it continues to go up. So I find that to be really neat. Let's go on to the next one. This is the $60 call that also expires January 16th of 2026. Same type of deal. A spike right here. This is around 10:30. Spike right here. Exact same spot around 10:30. So very interesting. And we see this open interest with the spike with the, exclamation point, like for Metal Gear Solid, blur, the alert thing or whatever. Volume has exceeded open interest. So we had an open interest of 7,000. Volume yesterday was about 20,000. And now the open interest is about 26.8 thousand. So basically all of that volume went into, increasing the open interest here. And, this could be buying calls, but It could also be selling covered calls, and that kind of, fits what, that this looks bearish overall. And so what we see, yeah, let's just do the math again. So 79 was the average from yesterday. So let's pull up the calculator. Multiply that by the change in open interest, which was 19,582. And it's around $1.5 million. So this person's making less money on this. If it's all the same person, let's just assume it is. But they're able to keep their shares. And if price goes up from 42 to above 60, then they'd have to sell at 60. And so then there's like a difference in, selling at 45. It's better to sell at 60. So they're getting less up front. But if this closes in the money, they'd be forced to sell higher. So that doesn't really seem like too bad of a deal. This is around 20,000. Let's look at this other one, the 45, also around 20,000. So very interesting. We can do just kind of a direct comparison with that difference between 45 strike and $60 strike. That's about $15. So if we multiply, again, lots of multiplication here, very simple math, but about 20,000. And let's actually just round this down to 19,000. Actually, let's just do this is 19.5 thousand over here for the 60. This one's 19.3. So let's just do 19.3 thousand. Okay, and we're going to multiply that by $15. That's the difference in these, strikes, the 45 versus over here, the 60. Sorry, yeah, $15. Okay, so let's just multiply this 19,000 by 15. And so that's 289. So it's not millions of dollars. So it's not as impressive as I would have thought. But anyways, this kind of suggests that, if price does come down, they just made, whatever it was, 1.5 million on this in that premium. But if price goes up, they're going to still hold on to those shares unless it closes above 60, and then they'd be forced to sell. So that's not really a bad deal considering price is at 42. Let's go on to the next contract I have on the list. This is a $65 call that expires in January. And this is one like the $30 call that expires in January that I believe, maybe Roaring Kitty was previously trading. And this is actually one that I have previously traded. I've made some money on it. Not holding any contracts right now with Unity, holding some shares. I've actually been trimming a little bit of my position to manage risk. If it does pull back, if it keeps going up, that's fine, but I need to be in the practice of taking profits. I don't think that's a bad thing, especially when you see stuff like this that's a little bit nefarious or a little bit sus, like the top could be in. It's not necessarily nefarious, but hey, maybe a top's going to be in soon. But yeah, this is the $65 call that expires in January. We see these candle spikes here. This one around 32,000, nothing too crazy. The total premium traded, I think I forgot to mention that for these, but this is, 146,000. So yesterday, this did not fall on the list here because it was not above $1 million traded yesterday. But this is one that, I'm interested, I want to follow up on, so I'm just going to look at it. We actually see an increase in open interest, but it's less than $1 million, so it's nothing too crazy. So yeah, nothing going on with that. And these other ones, I'm just going to go back. Sorry, the $60 call expires in January. 1.6 million traded on that yesterday, which the majority of that did go into the change in open interest. Then the $45 strike call, that was 6.7, almost $6.8 million there. Then the $30 call that expires in January, that was $82.8 million. So there, I think those are like the big ones. This put had 1.7. That's the $40 put that expires in, about 2 weeks on the 21st monthly contracts. And then the first one that I went over, the $35 strike call, that's $2.2 million traded yesterday on that. But yeah, coming back to this, 65 strike call expires in January. Now let's just go on to the next one, which is going to be a put, also expiring in January. This is the $38 strike put, expiring January 2026. And so we can see this one had a total premium yesterday of $1.3 million. No alerts on the open interest. The open interest was previously 5.7 thousand contracts, and volume was about 5,000, which led to a decrease of 2.338 thousand contracts. And so this would suggest the selling of puts. I wonder if it could be the selling cash secured puts. No, because then open interest would increase. So this would suggest selling of puts, and this could actually be bullish, and that would also be, like reflected in the increase of net put premium here, the red line that looks flat, but it did go up by about $1.8 million. And so we can just do the math here. The average fill for this contract was 268. So let's just clear what's on there. 262, and then multiply that by the change in open interest, 2,338. And from that, we can see it's about $600,000. So it's not, a huge amount of money, but, and this is in the money put, or this is an out of the money put, sorry, because we want to be closing below 38 for it to be in the money. So yeah, this is kind of a little bit of a confusing one for me, but I don't study puts as much, and it's like kind of inversing your thinking process, whereas with calls, it's not inverse, it's not betting against, it's betting on. But yeah, it's only $600,000, so I'm not too worried about this one. And then the next one on the list is a $40 strike call that expires in March, so 134 days between now and expiration. We did see an alert here, and let's see if I can hover over that so it pops up. Yep, volume has exceeded open interest, and that was around, let's see, when was that candle? That candle was at around 1 o'clock in the afternoon. And so yesterday, at the start of the day, we saw open interest of around 1.9 thousand, with a volume yesterday exceeding open interest, and that was at 2.5 thousand volume, with a total premium traded of around 1.7 million. So let's see, the average fill for this contract was around 670 right there. And then we're going to multiply that by the change in open interest, which was 1,237. That's about $800,000 change there. Again, it's not like millions of dollars. It's not $82 million, but this would suggest that, I guess I'm leaning more bearish looking at this data, but this makes me think that this is selling covered calls. $40, but these are in the money calls. So this could also just be because they're in the money. I don't know, but 134 days between now and expiration. I'm not really sure, but it's less than $1 million, so I'm not too concerned about it. And then this other one, the $65 strike call that expires in December on the 17th, but in 2027. So this is a leap. And that's 771 days between now and expiration. And this previously had an open interest of 87. Got the little exclamation point right there. Volume has exceeded open interest. 87 open interest with a volume yesterday of 3,001 contracts, going from 87 to 3,073. So that was a change of about 3,000 contracts. And if we open up the calculator here, the average fill was 990, and we multiply that by 2,986, and that represents about $3 million. This is an increase, $65 strike. Yeah, so, but this, this is what, confuses me. Why? Because it's so far out. Would you sell covered calls? $65. So, yeah, I think that this is something that I need to think more about, because, you could be collecting more premium sooner. But then this is also, it's just like, if you've got, 3,000 shares, let's look at the chart for a second. Okay, so let's say you got 3,000 shares and you didn't buy them all over here, but you bought them around here, around 20, let's say. And so if you have 3,000 shares, 3,000 shares, wait, actually 3,000 contracts, we're going to have to multiply that by 100. So that would be 300,000 shares. And you multiply that by, an average, fill, $20, $6 million. And so if you put in $6 million around here, around 20, and price has gone up a lot, you want to hold the shares, but maybe you want to take some risk off the table. So coming back over to this, what did I say about this one? That was, the premium here, $3 million. What was I saying? Anyways, put down 6 million, okay? And then so 990 times 2986. That's like 3 million. So let's say you put 6 million on this. You want to hold it for years until the end of 2027 at least, but you'd be happy selling at 65. You already put the money in. This is a way to say, I put the money in. I'm just going to take about 3 million out. I'll hold for the next couple of years. If it closes on this date above 65, then not only did I get this, 3 million, but that was, around 300,000 shares. Is that right? So that's because it's 3,000. Let's just do 3,000, rounding that to 3,000, but then it's, 100 shares per contract. So it's 300,000 shares. And now let's multiply that by, oops, I was supposed to be waking up now. And I meant to, I think that's going to go off. I snoozed it. Sorry about this. If you're still watching this, let me see. I am fumbling with my phone. If you're still watching this, let me know in the comments that, you heard my alarm. That lets me know that you guys value this kind of content. Anyways, that distracted me. And 300,000 right there. Multiply that by 65. And so this number of shares would then be worth, nearly, nearly $20 million. That's, just $500,000 short of 20 million. And so if one already collected $3 million by selling these, we can add $3 million to this because they just collected that premium. 3 million right there, being approximate. And so they've collected, if this closes and they sell at 65, that's taking a trade that began at, based on, let's say, the assumption is that they bought their 300,000 shares at 20. So if we're coming back to this, that was, $6 million. So they'd be taking $6 million and turning their net value of this into 16.5 million. So that's a pretty nice trade. And then it's like, I got 3 million in cash now. I can just sit feeling good about this. This is, taking millions of dollars and turning it into tens of millions of dollars. So yeah, I find that to be pretty compelling. And let's just look at the chart here. We do see the pre-market still around 42. I think that this could be topping soon. But, what are some signals other than, just kind of this divergence between the increase in volume and the very small spread in that candle? And just thinking about this, there's a lot of volume. If that just pushed it up, that would be good. That would be the momentum going higher. Maybe I want to switch this over to the 1 hour, and we can just kind of, think about this based on what happened yesterday. So, it's like a lot of volume initially, price comes down, and there's actually not that much volume pushing it up, but then there's a lot of volume towards the end of the day. That kind of looks like a bit of a double top there, thinking about that. And I guess I would have liked to see more volume at the bottom that would be suggesting that buyers are, snatching it up, pushing it higher. But as this comes down, there's less volume as it's down. and then really just time, slow buying. There's not, whoosh, a jump on it to a pouncing on it to push it higher. So this does make me think that Unity software could be getting ready to take a dump. But, I think that it's a long-term hold, like the contract suggests, 2027, this could be at $65, dollars a share. That's higher than it was over here. And actually, this makes me think about kind of some OG drawings that I did on University software, Unity software. And that's actually in Weeble, so I'm just going to pull that up. I got Amy here. Unity software, I got a lot of crap up here. But this is something that I drew a while ago where, you got the moving averages there, so please excuse those. You got a lot of doodles, please excuse those. But I want to draw your attention to this purple line going across right around $45. I had talked about, you guys might remember, if you remember me talking about Unity software a year ago, probably around a year ago, that this is, an inverse right shoulder, an inverse head, and now maybe we've put in, or are putting in an inverse right shoulder. Sorry if I meant inverse left shoulder over here. Now this is the inverse right shoulder. And that could be suggesting that, maybe things get a little bit boring, like this red bit here. We kind of, hang out around 45. But then when we launch above, we could be getting to 65. I believe when I did these older videos, I talked about 75. So yeah, I mean, this overall long-term big picture, I guess, I can just kind of redraw what I had over there. So head and shoulders tool, just going, this is the proximate. But we see this here coming up to that. And then so maybe this goes a little bit higher. And then from there, what we could do, we could just do a quick little Fibonacci extension going from the low here to the high and then pulling back to the low. And that could be suggesting, and actually I might want to draw that, just extend it forward to like, the end of 2027. It's going all the way over here. I have to actually extend this. So just trying to line that up with the bottoms here. And lining that up with, let's see. Oh, crap. Anyways, I drew that to about, I'm not seeing the date down here anymore. But yeah, that goes to, well, let's say around the end of 2027. And that 100% extension is around $67, $68. So right around 65, right around that strike. If I do a measured move from the bottom here and then take that to the bottom of that right shoulder, it does line up with that, so you could get that. But then looking at this macro, bigger picture, you want to flip this over to the log scale to get an idea about that. And that could actually be suggesting it goes up even higher, like to 117 or so, maybe by the end of 2027. So short term, we might be seeing a little bit of a dump. And then, maybe in 2026, we start to, bottom again. And then we could see, rallies up to $65 to $100, over the next couple of years. So this seems really exciting. I really like this a lot. This was fun to dive into this. Kind of rough. Hopefully it's helpful for you. I'm sorry my alarm went off. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot and have a great Thursday trading. I'll see you guys in the next one. Take care, guys. Bye.